Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income stream. My name is Matt, and in today's video, we're going to go over the trades I executed for August 20th. I'm going to talk about the covered calls, the cash secured puts, how I chose my specific strike prices, why I chose certain expiration dates, and then we're going to take a step back. We're going to take a look at the last 90 days of trading my own options and see what the results are going to look like. I talk about my daily values, weekly values, monthly values, and then the yearly values as well. And then I come up with a couple of estimates just so that we can see what some potential returns might look like. And I added a couple of data points that was requested from a couple of you guys from the comment section. So I have been making an update. Let me know if the changes are a net benefit or we can do without. But the first thing I like to talk about on my channel is my account value. That's more so one, sign of transparency, and number two, this is the number, this is how much money I am dealing with to generate my daily income. So currently it's at $174,685.83. The market today started off pretty bad. I was like, man, we might start heading into a little bit of a regression. But then as the end of the trading day came back, the market slowly started trending back upwards. So that might be a sign of stabilization, or that might just be a fake stabilization where then it goes down tomorrow and then Friday. So we will see how it actually plays out. But ideally, yeah, market was pretty bad in the morning, and then I made some hard calls for instead of running dailies. I chose different expiration dates, and then you'll see that in a second here. Let's head over to the spreadsheet and let's start talking about the last 90 days first. All right, guys, now that we are at the spreadsheet, let's start talking about the numbers. For August 20th, I bagged $445 of premium. Even though the market was relatively negative today or red, I was still able to bag that $445. Some of it was because I chose different expiration dates. I usually run daily covered calls and cash secured puts, but because of circumstance and how the market was trading, the market is way below my cost basis. So I decided to choose different expiration dates, and then I'll talk about that more once we get to the other side of the spreadsheet. But yep, the count is at $174,684. And in the last 90 trading days, I have bagged $29,597. So everything is going pretty good so far. If you look at my return from the last 90 trading days, I have made 19.39%. This number fluctuates, as you guys can tell here. The highest point, it was 21.96 or 22.04. But then markets, they go up and they go down. We're kind of in that down period. And let's take a look at what happened. So since yesterday, we're down negative 2.57%. Well, actually, from today, we're down only 0.08%. And then in this other section right here, the negative number right next to the other negative number is actually the SPY's change in value for the day, and it's negative 0.27%. So technically, I actually outperformed the SPY today. So that was pretty nice because I was able to bag that $445 of premium while the market just kind of did the market things. So we will see. This will be a nice way to track if I'm outperforming the market. Is the market outperforming me? And so we'll see what that will look like over time. So I definitely think this is a cool addition to my spreadsheets. Looking at my trade win percentage, I'm winning 97.78% of my trades. We had 88 winning days, 2 losing days, and as we mentioned before, we've elapsed 90 trading days in this year. And there is 90 trading days left in 2025, which is about 20 weeks of trading. And so that's about the halfway point. I started trading my own options about 3-4 months into 2025. I was invested into high income ETFs, and then I didn't like all of the NAV erosion and then getting paid back my own money. So I decided, hey, sold out of everything. Incurred a little bit of a loss while doing that, but I'm definitely making back that money now. I'm definitely happier that I'm running my own options. I'm making more premium than I was from the high income ETFs, no NAV erosion. I definitely think this is a more sustainable long-term solution than high income ETFs or high yield ETFs, whatever you want to call it. Looking at my trading performance, I'm averaging about $328 per day. I'm averaging about $1,557 per week. And then per month, I'm averaging about $6,484. With the 90 days of trading left, based on my account's trading performance, I should make another $31,000. We can look at this number, or we can just look at the amount of money I made in the last 90 trading days. I can just double this, and theoretically, that's what the next 90 days might look like. So at the end of that period might be, $58,000, close to $59,000. So to make, $59,000 in one calendar year running options for the first time doesn't seem too bad to me, guys. Looking at the average yearly premium, if I were to trade for a 12-month calendar period, based off of my trading performance, I would make about $81,000. And the way I came up with this number is I took my weekly premium, multiplied it by 52 because there's 52 weeks in a year, and then got that $81,000. And if we look at that as a percentage, that's about a 55% return based off of my initial investment. And from the last 90 trading days, that return has ranged somewhere between 49 to about 66%. Looking at my 2025 goal was really low. Initially, it was the right size goal, but then I added more money into my trading portfolio. And then this number became obsolete because then I was starting to generate more and more income every single day and every single week and every single month. And the initial goal was $29,740. This is when my account was at that $86,000 mark. Therefore, proportional to that account at that time, $29,000 was almost like 30-40%. But we are blowing that out of the water. We still have about $143 to go, and we will blow past that, and we still have 90 trading days to go. In 2026, I'll come up with a more accurate assessment. I'll probably come up with something based off of some of the estimates we are generating at the bottom here. So everything's going good in that regard. Okay, so looking at this bottom section here, guys, I added a couple of sections. I added net gain after taxes and then net percent gain after taxes. So the way that these cells work, these are all estimates based off of my current trading performance. And the way I plan on operating these cells is every year that elapses, I'm going to annotate the amount of income I generated, how much taxes I'm going to have to pay, what the end of the year value is, how much is left over after taxes, and then what is the net gain percentage. Once the year completes, I'm going to cell lock them, and then the other cells following after that will be based off my trading performance, and they're going to be estimates of what I have already done. So for 2025, I should make somewhere around $60,000, or like close to that $59,000 if we just double what I've already made. I should pay about $21,000 in taxes, and we take into consideration taxes and the income I made at the end of the year value. I should have about $84,000 once I pull money out for taxes. If we look at the net gain of my income after taxes, I will be making about $39,000. And if we look at the net gain after taxes, that's about a 27% return. Somebody in the comment section started talking about after tax gains, and then it just prompted me to then create this little section. These numbers after 2025 are all going to be the same because it's going to be based off of what my trading performance is. So the most accurate number at the time will be the year of. Yeah, guys, the reason why I have this tracker in the first place is we have to have a goal to strive for, and then what some potential returns might look like. If the markets are going to be bullish and green, these numbers are going to look like this. But if the markets start correcting, regressing, minor, depression happens, then these numbers are going to change accordingly. So it's going to be a living, breathing document. These numbers are going to be the change, and they're never going to be stagnant. So we already talked about 2025, but ideally in about 5 years from now, this is not the way I'm trading. I'm not going to be able to make enough money to get off my W-2 income. So therefore, we have to continue to, trade effectively, trade consistently. There's one thing to trade and have some wins, but then have some losses. But the best way to actually grow your money is to have a strategy and consistently do the same thing over and over again. It might not be sexy, but after 90 trading days, I made $29,000. I could have been trying to search for that home run, that perfect trade that would have made me that $29,000, or I consistently was just jabbing away and trying to snag a little bit of money, everything that hedge fund doesn't really care about. I'm able to snag that premium, and then now I have $29,000. It wasn't a home run, it wasn't a sexy $100,000 trade, but end of the day, to make $29,000 in 90 days, and then after maybe another 90 days, in 2025 to make $60,000. It's a median income of like a W-2 employee in the United States. So that's absolutely wild to then have that only trading 15 minutes every day in the morning. That's crazy. And with the size of the account that I have, it's only $174,000. Once I, pay off a little bit more bills and I start putting in more of my money into this account every single week, every single month, this is going to grow even exponentially, because I've pretty much had my initial lump sum into the account, and then I put in about $60,000 after I sold my primary residence. Once I had that money in there, I've been wheeling and dealing. I've been making a ton of premium. But 2030 is like a good touch point of, we'll make a determination, hey, should I keep working or not? Where's my fiance at? She working? Do we have kids? What kind of bills do we have? Like, did we have lifestyle creep affect us? Because that's a real thing. Once you start making more money, lifestyle creep, you want to go on vacations, you want to start buying things you don't need. So ideally, I like to think of myself as a minimalist. I don't like to buy things that don't bring value to my life. I usually, whenever I make a major purchase, think about it for 1 week, 2 weeks, 3 weeks. Especially if it's a lot of money, if it's like $50 or less, I don't even think about it. But if it's like, thousands of dollars, I'm definitely hesitant. And I like to make sure that the things I am buying and bringing into my life have meaning and have purpose. So 2030 is definitely a good point. Screw it. If I hate my job, at least I'd be able to make some money in the interim till I, find something else that I do like. So this is the one strategy where it's like, you can, make a ton of money like trading this way and then having your W-2, but then say something happens. This is like a backup plan, right? Because a lot of people are like, oh, you should be trading this, money inside of a tax advantage account. But it's like, the thing about a tax advantage account, you can't be pulling that money out, right? So with this kind of account, like, even if I got laid off today from my job, I still would be able to bring in some amount of income to then pay my mortgage, to then pay like all of my debts that I currently have. Versus if I just blanket put all of my money into a 401k, I wouldn't be able to do that. So this is one kind of like my emergency fund. So if something happens, I'd be able to like weather the storm. And then two, this is going to be a tool to help me then progress, my investing strategy further, and then maybe potentially take me off a W-2 income sooner. But we'll see. 2030, that's going to be a real decision point. We'll see what the account looks like at that time. But then if I grind it out all the way until 2035, at that point, I should be about 41, 42 years old. I'm lucky that I started this whole investing journey sooner rather than later. But then some of these numbers look crazy. Like, if I wait 10 years, I should be making $1.6 million. And then my account's going to be, almost $4 million. After taxes, I'd be making 1 million, and it should be about a 36% return. I'm definitely going to take that every single day of the week. And even by that point, if it's half of this, if it's half of $1.6 million, how much is that? That's $800,000. If it's, a fourth of that, my math is going to be terrible. Well, it's going to be like also $400,000. And telling me if you can't live off of $400,000, man, money is one thing. For me, the way I view money is just like a tool that can get you your time back. There's one thing in life you can never get back. It's your time. And therefore, this is one of the strategies I've been adopting, my own trading, covered calls, cash puts, so that I can get my time back. So that's where we're at right now. This is the vision. These numbers are going to change, as, the trading progresses. I just like to look at this bottom section as, hope. I don't know if we'll ever get here making $1.9 billion of just options trading, because I will say, as the account gets bigger, I don't know if I'd be able to run the same type of option plays that I'm currently doing. So I probably would use a ladder strategy, choose a couple of different strike prices, spread out my risk. And then some of my strike prices would capture a ton of appreciation. Some of my strike prices would get more premium. So I definitely think my strategy would evolve. But right now, I'm in the money compilation phase. So hopefully you guys think this is an interesting ad. I definitely like it. Interesting ad. So let's take a look at the weekly numbers and the monthly numbers. Over here for this August 18th section, this is the weekly numbers for the week we're currently in. When we're at $1,046, so we've hit the 4-digit club 2 weeks in a row. I'm pretty stoked about that. Really happy about that. Let's see what tomorrow, Thursday, and then Friday is going to look like. So we have 2 more trading days left. I don't know how much more premium I'll be able to squeeze, because most of my options are locked in until Friday, but we'll talk about that in a minute here. And then for the monthly tracker for August, I put that in the wrong spot because we are definitely not in September. We are at $3,669. And for the yearly tracker, we are at $29,597, as I mentioned earlier. So let's head over to the other side of the spreadsheet. Let's start talking about the individual trades I executed and some of my thought process, my strategy. All right, guys, let's dive into some of these numbers for August 20th. Going into August 20th, I had 300 shares of the QQQ, 200 shares of SPY, and then I had some money available for some cash secured puts. And then I also had a cash secured put on Oracle from the previous day. So let's dive into it. For my QQQ covered calls, scroll so it looks a little bit better here. For my QQQ covered calls, I have 3 different buying points. I had the 573, 580, and the 581. And ideally, the way I trade, because I've been bit a few times with selling below my cost basis, I will not choose a strike price below my cost basis. I will just gut bad premium until the market recovers. That could be 1 day, that could be 1 week, that could be 1 month, or that could be 1 year. And I've set myself up, and that's the way I'm going to trade. Everyone has their own methodology, but I don't like being bit and then caught off guard and then losing, $900 on a random, Monday morning. So ideally, I don't want to do that. So this is what I did. For my 573 strike price, I chose for all of my QQQ covered calls, all of them are going to be expiring on Friday. So that's how I was able to capture a little bit more premium. For my 573 strike price, my bot price, I also chose a 573 strike price, and I was able to make $129 of premium because I chose an expiration that was 2-3 days away from the current day. So likely I was able to make $129 of premium. The market opened at the 568 today, and then it closed at the 565, which definitely was a red market. And then looking at my QQQ, other QQQ shares for the 580, I made $19, and the 581, I made $14. And so my thought process going into today's trading is I initially was going to run a daily options on my, QQQ shares, but because the premiums were so low that I'm like, man, let's see. I wanted to take a look at what, 3 days away and the expiration on Friday, August 22nd will look like. The money was a little bit better. And because we don't know if the market is going to go up, stay neutral, or go down, I decided to take that bet where I'd rather just lock in the money up front. And then whatever happens in the market happens in the market. If it goes up and recovers and gets back up to that 573 mark or the 580, 581, that's going to be great. I locked in my premium, my gains, and that will be a-okay. These are currently active. And yep, I made that money for those. For my SPY shares, I had 2 different cost points or 2 different buying points, the 644 and the 641. For my 644 shares, I had made $104 of premium, and the same concept applied to from the QQQ shares. I initially was going to run a daily, but the premium was so low, I decided to choose an expiration date that was 3 days away. So it was Wednesday, Thursday, Friday. So it was 3 days away. Magged $104 for the SPY. Market opened at that 639.32, and then it actually closed at the 638.07. So for the SPY, it held its value a little bit better than the QQQ. That's currently active. Yep, bagged that $104. And then for my 641 strike price, I actually did run a daily on this one. The strike price, my buying price was close enough to where the market opened up, and then I was able to make a decent amount of premium. Like I said, market opened at that 639.32, chose a 641 strike price, bagged in $36. Tomorrow morning, I'm probably going to run another covered call on the SPY. I don't know if I'll be able to make $36 because if it's opening at 638, I'm going to make a little bit less. Might just shoot it out till Friday. We will see what the market giveth, what the market take it away. And then, yep. So those are my SPY shares. My Oracle cash secured put, I'm bringing this one in from yesterday. I was able to bag, how much was it? $195 from yesterday. So nothing really changes here. Oracle, from when it opened today at that 232.11 to where it closed at that 235, went up a little bit, and I'm hoping by Friday it goes higher than 237.50. But if I happen to get these shares assigned, that's not going to be a problem. I'm just going to sell them at the money on Monday, hopefully lock in a ton of premium, and then by the end of the trading week, offload the shares. I will have to hold on to a little bit of margin if these get assigned, but the amount of margin interest I'm going to have to pay versus how much money I'm making, it's not even the cost analysis and the risk analysis is even there. I'm making way more premium just having the margin. But ideally, I don't want to overdo it on the margin. That's just, a little bit of surge from time to time. And because it's a little bit of a red market, might as well surge. And then the other Oracle cash secured put I have here, I ran this today. I bagged $143 running another cash secured put on the Oracle. I chose a strike price of the 227.50. Market opened at that 232, and then when I happened to run this cash secured put, it was closer to the 227. I think it dropped to like 228, 229. I don't necessarily remember exactly, but then yet market for Oracle went up to the 235.03, is currently active, and then it has an expiration date of Friday. And then the last thing I did is, target of opportunity. If there's like a red market and I see a stock that's a stock that's performing well, but that's undervalued, that was Amazon today. When I bought this call, Amazon was trading at that 223.91. This, this stock is easily a $230 stock, $240 stock. And the fact that it's at this 223.91, I decided to do a 1 year leap on Amazon so that I can capture some of the appreciation. But when this number gets closer to like, I don't know, for me, I just lock in, $300, $400 a gain. So it's like a 60 delta. So what is that? If it goes up to like 228 or 229, I'm probably going to sell out of this buy call so I can lock in, $400 or something around that number. The math is kind of hazy right now. And then I still have to set up my limit order, but that'd be a nice way to bag a couple $100 just, buying a good stock or betting on a good stock. This is going to go up. I have no doubt in my mind. And that's currently active. There's no premium there because the only way I make my money is when I sell this option. But yeah, guys, end of that trading day, $445. I can't really complain about that. I was pretty happy with how that performed. We hit that 4-digit club for this week. Whatever happens for a Thursday and Friday, it doesn't necessarily matter. I'm definitely betting on hoping that my Oracle cash secured puts are out of the money and I do not get them assigned. But if they get assigned, that's probably the worst thing that can happen. I just, turn them around, run covered calls, and then get rid of them that way. Let's head over to Robinhood and then talk about the very few things I plan on doing for tomorrow, August 21st. Okay, guys, we are back at Robinhood. Let's take a look at my buying power available. So my margin total is $376,000. I'm currently using about $125,000 of margin, and that's for my 200 shares of SPY. I was hoping to have those, off the books by now, but because the market regressed a little bit, I had to hold them a little bit longer than necessary. For my options collateral, these are my 2 cash secured puts on Oracle. So that's netting about $46,000. So this options collateral, none of this money is actually getting charged margin. Not trying to be careful not to say margin hood again. None of this options collateral is being charged margin interest because I'm not owning the shares. Robinhood allows you to borrow their margin without having to pay them interest until you actually buy the shares. So that's how I'm able to squeeze out more money in my account, is because I'm able to run cash secured puts using Robinhood margin. And then unless it gets assigned and then I buy the shares, I'm just making premium off of that cash secured put. So that's what I like to do to squeeze out more money from my portfolio. And then the way that's done is Robinhood allows you to do event contracts. And this is, they usually give you like a $1-for-$1 of your cash. Maybe it might be 75%. I've noticed it's like somewhere between $1-for-$1 to your cash to, 80% of your cash value. So basically like my account, $174,000. They might give you like $160,000 of buying power. So that's just like food for thought. And to enable this, you have to go into your Robinhood settings and enable event contracts. And I think it's also futures. So that might be an interesting strategy for you guys to adopt. I like to use it. I'm able to squeeze out more money because if I didn't run my own cash secured puts this way, I probably would be making about half the amount of premium per day, per month, per week. Cool. As I mentioned in the spreadsheet, these are all of my positions that are held, my Oracle stuff, all of my QQQ stuff, my SPY covered calls, Amazon calls. So that's where we're at. And then this is where I actually own my shares, 200 shares of SPY and 300 shares of QQQ. For SPY, that's the only covered call I'd be able to run tomorrow. So let's take a look at what some of the numbers might look like. So let's go to sell call. That's how you run covered calls in Robinhood. You have to click the sell call. And let's take a look at what the daily looks like. Expiring August 21st, which is tomorrow, Thursday, August 21st. So SPY trading at the 638.07. Let's see what this 641 strike price, a 0.210 delta, $43. Not too bad. Let's take a look at what the 22nd might look like. Oof. I am liking $1.57 a lot more than $43. Delta of 0.34. I think tomorrow I might just run an expiration day of 1 day, 2 days, which is expiring on the 22nd, so I can capture a little bit more premium at this 641 strike price. Nice 0.34 delta. Also depends on what the market gives us tomorrow morning. The market is relatively neutral to red. I'm probably going to hit this, Friday expiration on August 22nd. If the market is green, I'll just go back to my daily, and then hopefully it'll get closer to my cost basis, and then I can run an option or covered call so I can capture a little bit more premium. So that's really it for the SPY. I do have some event contracts available, and man, Oracle's been paying a lot of premium lately compared to their costs. So let's see what some of these cash secured puts might look like. Oh dang, Oracle's at 236, and it's closing in on that 237.50. Just need to go up $1, 32, and then I'm set. Okay, let's look at the trade Oracle option, sell put. This is how you run cash secured puts in Robinhood. You click on the sell put button. Investor gives you upfront premium. And here we go. Trading at that 236. Yeah, for tomorrow, if Oracle is where it's at right now, I'll probably choose like a 230 strike price. Nice 0.26 delta. 0.26 delta means there's a 26% chance it's going to execute. So I'd bag in that $135. So I think so I might run this, and then if I have some more event contracts on Friday, might run some more on Friday. We'll see. But yeah, pretty much running the covered call on the SPY tomorrow. Probably going to choose an expiration date of Friday, the 22nd. And then for my cash secured put money I still have available, I'll probably run a cash secured put on Oracle. Same thing, expiration on Friday, but choose that strike price of 230. So maybe tomorrow might be like a low $200 day, but I'll take premium over no premium. So yeah, guys, that wraps up the video. Hopefully you learned something new. Hopefully you have a different perspective. Hopefully you like the new additions to the spreadsheet of the SPY tracker compared to what my account is performing, and then some of the net gain after taxes, and then so on and so forth. Yeah, guys, let's stay locked in, stay disciplined, stay harvesting. Matt out. I'll see you in the next one.